Hi, and welcome to your weekly real estate tip. My name is Sean Bobbitt with Coldwell Banker Heritage Realtors. And today we have a special guest, Taylor Pegg, a loan officer with Prime Lending. Taylor has done some of my personal loans for me. He has a lot of experience and does a great job. So we're going to bring him in to answer a few of our questions about the loan process.
Hey, Sean.
Thanks for coming in today, Taylor. I was hoping to give my clients a better understanding of the loan process and answer any questions they may have or questions that I get on a frequent basis from my clients. Do you think you could give us an idea of just what to expect, a general overview of the whole process?
Yeah, definitely. So the first step to getting pre-approved is the loan application. They can either apply online, give me a call, or we can meet face-to-face. Sometimes customers like to see that face-to-face, like they kind of meet me instead of, I know sometimes they don't want to have that robotic feel to the whole entire transaction, especially when it's such a big transaction and it's one of the biggest purchases of the customer's life. So that's what I'm here for, trying to give them the walkthrough. So once we do get that loan application started and we complete it and the credit checks out, they'll give me their W-2s, pay stubs, bank statements, and tax returns in order to get pre-approved. So once we get that, I'll send you the pre-approval, and once you get the pre-approval, they can go house hunting, and that's the most fun part of the whole entire
Absolutely, that's the exciting part.
Yeah, and so once they do find the house, that's when the real fun starts on my behalf. I start getting the whole entire loan processed, and once I do get the loan processed and goes through processing, we send it to underwriting. And once we hear back from the underwriter, we will see if we can get the clear to close. Sometimes the underwriter does ask for more documentation, but that's just part of the whole entire loan game.
Right.
But once we do get that clear to close, that means they get to move into their house. So.
Awesome. So the first step is really applying for that pre-approval.
Correct.
And then once you have, the biggest thing is getting that pre-approval so you can start house hunting.
Yeah.
Great. So what are some of the common mistakes you see buyers make either while they're trying to get pre-approved or after they've already found the house? Things that future buyers can learn from so they don't get tripped up and make the process a little bit smoother.
Yeah, some of the biggest mistakes are opening new lines of credit. I know sometimes they get really excited that they're buying that house, they want to buy all the furniture. Well, when they do buy that furniture and they want to finance it, that can affect their debt-to-income ratio. Right. And when that does affect their debt-to-income ratio, it can knock them out of qualifying for the home, and then we have a dead deal.
Right.
And that's no fun. Then also, sometimes people like to buy cars. I know they look really pretty, but sometimes that can throw off their debt-to-income ratio as well. And also, you don't want to be spending all the money, especially for your down payment. So that can stop you from buying a house as well, especially when you've been already waiting 30 days, 45 days to buy that house.
And it's easy to get into that spending mindset when you're buying a new house and you want the new furniture and all that sort of thing. But essentially, just no new lines of credit.
Correct.
And if you're going to finance the furniture for your new house, then wait till the day after closing.
Correct.
To make sure before you open up any of those lines.
Yeah.
Well, great. Well, the next thing I want to talk about is I hear a lot of myths come from my clients, especially first-time home buyers, but even experienced buyers.
Yeah.
People still think you need 20% down or perfect credit in order to buy a house. Could you elaborate a little bit on some of the myths that you come across a lot?
Correct. I've had a lot of customers that are like, well, I don't have 20% down. I'm like, well, that's good that you don't really need 20% down anymore. We can go as low as 3% down on a conventional loan, which is great. And then a lot of customers think they need to have like a 720 or above, and that's not true as well. We can go as low as a 580 credit score on an FHA loan.
Right.
Yeah. So which is good, and VA loans as well.
Okay. And you guys even have different types where they'll have 0% for maybe a farm property or things along that nature.
Correct. We have a wide variety of loan products with Prime Lending, and what's great is that the USDA loan is what you're talking about. You get 100% financing, and then also you have FHA loans, VA loans for your veterans. A lot of veterans love that loan because they get 100% financing as well. And also we have construction loans, we have jumbo loans, we also have down payment assistance, and then renovation loans, which is great because you have a lot of customers that want to do the fixer-uppers. They want that new bathroom, they see the TLC shows, and they want to have those, they want to be able to do those renovations, and we have the capability of doing that for them, and with an FHA or conventional loan. So, yeah.
And I know that's why I use you guys personally, is because of all the different types of loans. You can really shop around and see which one of your products is going to fit best for me. So speaking of that, that's how kind of I made my decision on which lender to use. What do you suggest to clients or potential buyers in when they're searching for a lender and they're maybe comparing 2 or 3? What are the financial things to look at, as well as just the personality things to make sure that's a match?
Correct. One of the biggest things is to be able to make sure that you can communicate with your lender on a regular basis. They can communicate with them on the weekends as well, but make sure that you have that full customer service package along with a good competitive interest rate as well.
Absolutely, and closing costs will fluctuate too as
Correct.
well, right?
Correct.
And some lenders will have you pay points versus that kind of thing. So you really need to make sure that you're seeing those cost sheets and knowing where all of your money is going.
Exactly. You want to make sure you want to get that cost sheet, because sometimes you may see that really low interest rate, but when that lender's throwing in those discount points, can really affect your bottom line.
Well, thank you for coming in. I know this information is going to help my clients out a lot when they're looking for their new house, or just information about the general process. I really appreciate you taking the time out of your day today.
No problem. Thank you, Sean.
Thank you. I hope you guys enjoyed today's talk, and remember to like, comment, and share down below, and we'll see you next week.